Hey guys, Dave Keller here with Market Misbehavior. We've done a couple choose your own adventure style videos previously, one on the S&P 500, one on Bitcoin. I'll put the links to both of those in the description below. But I wanted to ask you in particular today about Tesla. This is a stock that people love to love and a stock that people love to hate. There are plenty of people advocating for plenty of further upside for stocks like Tesla. On the other side, you have plenty of people suggesting that these are the types of stocks that could or should or may go all the way to zero, literally to no longer exist from a technical perspective. What we're going to do are lay out 4 different scenarios for Tesla, talk about the technical implications for each of those 4 scenarios and allow you to vote on which you see as the most likely and why. So today, choose your own adventure on Tesla. So I've done a couple of these choose your own adventure style videos on this channel before, one on the S&P 500 and one on Bitcoin. And today we're going to talk about Tesla. Now, if you remember choose your own adventure books when you were little, or if you've seen them at all, they were a really cool design. It was a book that you could actually participate in. You could influence the characters in the story and make decisions and see how that impacted the narrative and the characters that were part of this these great stories. I love to think as an investor about different scenarios. I always tell people that investing is not about absolutes. We don't know what's going to happen tomorrow, even in the next moment. Forget about days or months or weeks from now. But even though we can't tell the future, we don't have a crystal ball, and no one really does, what we do have is the ability to think about potential probabilities. And that's what I think technical analysis does. It's built on probabilities, not certainties. It helps you allocate certain probabilistic outcomes or allocate probabilities to certain outcomes and have a sense of what could happen, what's most likely to happen, but also think about what could happen, right? What is less likely but still possible, because I find by doing that, by thinking of those scenarios ahead of time, you're preparing yourself for whatever the market may bring. Now, before we get to the charts, I just want to remind you, if this sort of thinking about investor decision-making, behavior, routines, processes, technical analysis, behavioral finance, trend momentum, all of that is of interest to you, I hope you'll subscribe. It would be great to have you along this journey with me. Also, give the video a like if you appreciated it. We'd very much appreciate that back. Finally, put a comment below today's video. Once I give you the 4 scenarios, you tell me which you see as most likely and why. Let's get to the charts. All right, we're going to start with a 1-year chart of Tesla. This is where we're going to spend a good amount of our time here. And this is basically illustrating the price of Tesla over the last year. Now, we have some lines on here, which we'll break down and talk about here in a few moments. But basically, we have the price at the top, the daily open, high, low, close. We have 2 moving averages, the 50 and 200-day moving average, which are fairly common. Below that, we have RSI, which is a measure of price momentum. And then at the very bottom, we have the relative strength of Tesla versus the S&P 500, what's called relative strength or relative performance. Now, to really set the stage for this, we have to go back about another year, I would say, this and show the left half of this chart, or really the first 2/3 of this chart, maybe what we call the golden age of Tesla, or so far the golden age of Tesla. This is when Tesla as a chart could really do no wrong. This is through the later stages of 2019, even through the market correction, February and March of 2020, and then continuing on through early 2021. Tesla consistently made new highs and new lows. It recovered from the March 2020 sell-off more quickly than a lot of other stocks, made new highs very quickly, and then just accelerated to the upside. And you can see the pace of that acceleration and how it far outweighed the gains of other stocks by the fact that the relative strength line consistently went higher, right? Just pushed so strongly to the upside. And every one of those little moves higher shows another time when Tesla was outperforming the broader S&P 500, just doing better than the average stock. That all changed, though, when 2021 started. And really after mid-January from there, the relative strength line has been flat to down, right? That was the relative peak in Tesla. That was the peak of its relative performance, where it had performed the strongest versus a jury of its peers. From there, you can see Tesla on an absolute basis has consolidated quite a bit and now potentially starting to rotate higher. Let's go back to that 1-year chart. We can see that in a little more detail. So now we're looking at the last 1 year. We can see in this December into January, stocks making new all-time highs, and then we can start to see the uptrend is over. And the uptrend is over because we stopped making new highs, right? A Dow theory, Charles Dow's General approach to trend following is an uptrend is a pattern of higher highs and higher lows. And as long as a chart keeps making higher highs, the chart's in an uptrend. When it stops making higher highs, which Tesla very much did in January into February of this year, the trend is no longer positive. At the very least, it's consolidating, or sideways at the very worst, it's in a downtrend. Now, depending on your time frame, you could call that a short-term downtrend, at the very least, a pullback within this uptrend. From there, though, if you take a step back and just look at this chart, you can see this consolidation pattern. This is also actually called a descending triangle pattern, which is a price pattern where we have a consistent support level right around 550. That was first just touched there briefly in early December of last year, then again in March, then again in May. So we have three connections to that line. We're extending that line to where we're at now. 550 has been an important level for Tesla as a chart. So you have a consistent support level, and then you have declining highs. You actually have a pattern of lower highs. So it's a descending triangle because it's a triangle coming to a point, but it's sort of sloping downwards a little bit. So that's what that pattern definitely is. And in general, this pattern tends to resolve downwards, which is why back here we talked about that 550 level as being really important for our clients, and suggested, a break below there would certainly be a sign of much higher likelihood of greater deterioration in the stock price. But if you look, 550 really wasn't violated. And instead of breaking that pattern to the downside, it actually resolved the pattern to the upside. You broke out of that descending triangle pattern in June, retested that pattern from above a couple times here in July, and then rotated back to the upside. Now we have this level here, this 700 level. I'm going to extend it just a little bit so it's maybe a little easier to see here. Let's pop it here, and there we go. Okay, so you can see how June, July, you can see how that 550 level, that 700 level serves as resistance. This is a new ceiling in the market. We broke above there in July, broke briefly below it to test moving average support, and now have rotated back to the upside. And one of the reasons why we wanted to feature this chart and this stock in this week's video was because it's now broken above the swing high. It's broken above the high from early August, and now potentially breaking out of this consolidation phase. You could make an argument that this was a big accumulation phase or an uptrend. We then had a consolidation phase, a sideways pattern, range-bound pattern, and now we're potentially breaking out of that pattern to the upside. It's now above two upward sloping moving averages. The 50 and 200-day moving averages are about the same, around 690 right now, but we've bounced off of those moving averages a number of times, and now we're starting to rotate to the upside. So the real question is, what's next for Tesla? Here's what I'm going to do. I'm going to give you 4 different scenarios. We talked about the price. We talked about the momentum. We actually did not talk about the momentum, so let's cover that really quickly. The other information that you have to make your decision is momentum. I would note that RSI here for Tesla was in a bullish phase for the first half of the chart, never really got below 40 and often became overbought. Here, sort of in February, March, April, May, you would argue that it was sort of in a bearish phase, right? So the RSI becomes oversold on rallies. The RSI doesn't get above 60. When that whole range bumps down like that, it's more of a bearish phase for Tesla. Then you can see it gets back above there, June, July, August. We've not quite become overbought, but we have remained above 40. So you basically can say these two things here. I'm going to do a quick little shading here to show you. In this part of the chart, you can see that the RSI becomes overbought, rarely gets below 40, which is more of a bullish phase. Over here, though, you can see that that pattern changes, and we start to become in, let's draw it like here. Here, all of a sudden, I like to overlap them a little bit because that's kind of fair. We can make this like an amberish color and make that a little easier to see. There we go. So now in February, March, April, May, June, we're now in more of a bearish phase where we become oversold on sell-offs. We rarely get above an RSI of 60. Now we're sort of in a neutral-ish mode. I think you can make the argument that we're back in the bullish phase, similar to what we saw in the first half of the chart. Or you could say, because we've not become overbought quite yet, that it's not making the transition just yet into the bullish phase. Finally, at the bottom, we have the RSI, the relative strength, relative performance of Tesla versus the S&P. You can see the stock was outperforming for the first half of this chart, underperforming for the next couple months, and then really been sideways for quite a while. The relative strength just barely, just attempting to make a new 3-month relative high, which I often use as an indication of a new swing higher. Okay. Now the 4 scenarios. To draw these, I'm actually going to go to a different chart. Here we go. we have this chart, which I've just taken a screenshot of, and I can show you the 4 different scenarios. First, we have the ultra bullish scenario. This breakout, and what scenario this plays out like this over the next 6 to 8 weeks, we'll call it. This breakout is the beginning of something very, very good. Not only do we continue higher, but we break above this very important high from January and we continue. So actually, we get above 900, and that's the all-time high in Tesla here from back in January. This bullish scenario takes us above 900 in the next 6 to 8 weeks, making new all-time highs for Tesla. It is now 100% retraced this pullback from January to March of this year. It's made it all the way back and even more. Tesla is one of the stocks that drives the way higher, leads the market to the upside. Scenario 2, what we might call the mildly bullish scenario. We've broken above here and we have enough to get us up to 900, but not to get above it. And let's say that 700, which served as support and has served as resistance here recently, becomes the new floor. So the breakout level becomes the floor. The previous all-time highs become the ceiling, and we rotate between that 700 to 900 range. That's scenario number 2. Scenario number 3 is this is a failed breakout. We've seen that with stocks, with Apple, for example, that broke out and then kind of came down. Amazon, which broke out of its range and then immediately came back down to go below it. So we spend very little time above 700. We get back below 700. We spend most of our time over the next 6 to 8 weeks between 550, which is the floor from March and May of this year, and 700, which is the level we just broke above. We spend most of our time between 550 and 700, and that's where we end that period. The final scenario, what we might call the very bearish scenario, is not only is this a failed breakout, not only do we come down, but we don't hold that 550 level. We actually retrace even further, taking us down maybe to 400, which was the lows from back here in October and November of last year. It's worth noting that that scenario would certainly have to be a part of a much broader distribution in stocks, I would think most likely, right? Stocks would have to sell off for that scenario to become likely. So which of those 4 is most probabilistic, most probable here in the next 6 to 8 weeks, and why? Scenario 1, the ultra bullish scenario. Scenario 2, the mildly bullish. Number 3, between 550, 700, the mildly bearish or the very bearish. We go below 550 in the next 6 to 8 weeks. Put a comment below and tell me which you think is most likely and why. So there we go. I throw down the gauntlet. I give you 4 potential scenarios for Tesla. I've talked through the technical scenarios, what that would actually look like, and why this potential rotation means you now can consider each of those 4 different scenarios. So which do you think is most likely and why? The very bullish, the mildly bearish, the very bearish. 1, 2, 3, or 4. Put a comment below the video. Tell me which of those scenarios you see as most likely and why. As a reminder, if you like this sort of thinking about technical analysis, behavioral finance, and charts, subscribe to the channel if you would. It'd be great to have you along this journey with us. Also, if you like the video, give it a thumbs up. We would very much appreciate that back. For everyone here at Market Misbehavior, I'm Dave Keller. Be well, stay safe. Talk to you again soon.